The stock of the day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
Stock of the day is Medicus, the imaging IT provider, distributing a 25-cent interim dividend as its half-year net profit jumped 43%. The company also flagging to the market it remains debt-free but has not provided guidance with more than $180 million in cash reserves. Chief Executive Sam Hupert has hinted it may be used for future M&A but has not provided specifics. And in fact, we'll be hearing from Sam Hupert a bit later on ausbiz, so make sure you tune in for that. All right, but as we can see, shares down today. Of course, my goodness, it has been one of the stocks on the ASX. If you've been in there, well done. Been an amazing ride. The outlook, though, the company's saying we continue to see many opportunities in the US, many on the back of the annual RSNA conference, which was the biggest to date, saying we continue to build a pipeline of opportunities across all market segments and across client sizes. And Ben, as mentioned, the 180 million net cash does have some opportunity to obviously spend.
Yep. Look, I don't think the company's ever really given guidance. I wouldn't be too concerned about that. It's obviously like relying on contract wins and they can accelerate. They're sort of a bit out of your control, so it must be hard to provide guidance for the business. But you couldn't fault the numbers. They're outstanding. They needed to be, given the valuation that the market's putting on this business. I mean, you know, you go back 5 years and who would have thought this company would have a higher share price than CSL, it would have been a micro cap then, and CSL was the biggest player in the biotech or healthcare sector. So it's been extraordinary. I'll say a hold because I think, as Mark was saying earlier, momentum is still a powerful thing in today's market, and this company has share price and earnings momentum in spades. I wouldn't be surprised to see a decent correction on the back of this result, and you know, it's probably one that you want to keep an eye on and have on your buy list if you felt like you were getting it for a decent valuation.
So you're not tempted to take profit at all?
No, I'd be holding, I think. Yeah, I mean, we don't own it, so if I was an owner, I would absolutely have been trimming it the whole way up, just because the relative size of the position would have just blown out versus the rest of a portfolio. So from a risk management point of view, I think you've got to decide what's an appropriate percentage to have in a stock like this, and if it's going through that, then you're taking some off. But that's not because of the outlook for the business, which is still outstanding.
Yeah, in isolation, we've written up risk management reports for single stocks, just as a sort of more, you know, my background being a trader for many years, and because I would have, from Ben's exactly right, like you'd be trimming the whole way up from a portfolio standpoint, but from a single stock standpoint, we just set a plan to let it run, and we set a number of triggers to be trimming along the way. We've basically not had to trim, but it is getting fairly close at the moment to, I think, a bust below 260 really will trigger a rebalancing trim, and nothing more than that, to be honest. It's, you know, what is it, 350 PE? Like it's a sentiment stock realistically. If the market loses belief, it'll pull back. If they start throwing out some really good news and contract wins, then it could easily go through $300, and sentiment's super hard to predict. So at this point, it's kind of more of a technical analysis point of view from our standpoint, because the fundamentals are all there, but it's super expensive. So yeah, we're basically sticking to the plan, because I would have sold it about 10 times on the way up, I've got to say. So thank God we purposely put it in place for these sort of hyper growth stocks. One thing I think, you know, obviously as we move into the AI era as well, as they get bigger, the data is going to be super. I don't think anyone's really pricing in how valuable that data is going to be in the future as well. I don't think Medicus has even spoken about it, but I would say from an AI standpoint, you need clean data and you need lots of it. You know, I think there's probably IP value in that. If it's saleable, may not be HIPAA compliant. I'm not 100%, but this really does play into future AI as well, with that huge database of diagnostics as well. So yeah, I think it continues to go up, but it is very expensive at the moment. So I think if it breaks below 265, you probably trim some, like maybe 20% of your position, with a view to buy back in potentially. But just keep riding it while you can. And it's a very slight trim. It's more for rebalancing. Definitely not a sell.
That is our stock of the day. Pro Medicus.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.